In the world of business, Asian markets have opened higher following Christmas holiday gains on Wall Street. The markets in Japan have risen, the Nikkei 225 index seeing a 1.3% jump. Markets in China were up, with the Hang Seng Index climbing 1.87% and the Shanghai Stock Exchange gaining 0.56%. Meanwhile, China's industrial profits posted double-digit gains despite demand remaining soft. The 29.5% profit rise came alongside a pickup in industrial output last month. Let's go to Dubai and speak to Jamil Ahmed, who's an online trading brokerage at GTC chief analyst. Jamil, thank you very much for your time. Apparently this is called, as you know, I'm not a business expert, apparently it's called a Santa Claus rally. Does that mean it disappears when Santa Claus returns home?
Well, Halloween doesn't come that soon. I would say that this is a Christmas rally, but we also have to take into account that this is a Christmas rally that has been in place since November now. November was the best month for global markets and global stocks for roughly 3 years. That trend has continued up until December, and as we start to approach the 2024 first trading day, which will be next week, we also have to take into account what's really driving this rally. In fact, it's not just the sentiment around Christmas rallies, it's the hopes and the optimisms, and also how central banks such as the US Federal Reserve have prepared financial markets that sometime at the end of Q1, moving forward, we will see lower interest rates in the United States. That generally means more liquidity and more ease to capital and borrowing costs for global corporations, which have always enjoyed such news. And that sums up in a nutshell why global markets are continuing to rally.
What about this good news for China's industrial profits? I mean, overall, is China still in trouble?
Trouble to what extent? I would say that for China, it's definitely a new and normal of lower economic growth. The economic growth forecast of 5% for 2023, they look like it's going to be touch and go. Some economists are already predicting, and think tanks, that it's actually growth is going to come in somewhere around 4.2 to 4.3%. Overall, the data is still underwhelming by the China standards of 10 years ago. To give you an example of this, the Center of Economics and Business Research based in London, they were expecting in 2015 that China would overtake the United States economy to be the world's leading economy as early as 2025 to 2027. Just yesterday, those expectations are now being pushed back by a further decade. So it looks like China will not overtake the United States until as early or as late as 2035. And again, in international finance and the world we're living in today with interconnectivity, things change in an instant. And I would say that China's economy is more of a concern for everybody else because slowing global demand. But we do see the signs of the strain that the 3 years of COVID lockdowns basically means that China has not been able to get its engine started again.
Jamil, when New Year comes, a happy one to you. Thanks so much indeed. Some of the other top business stories from around the world. In a recent announcement, the United States extended tariff exclusions on more than 300 Chinese imports, including industrial components and medical products, which will now last until the end of May next year. Apple has appealed a ruling by the US International Trade Commission to ban imports of its Series 9 and Ultra 2 smartwatches. The move came after the White House refused to overturn the restrictions over a patent dispute. And Toyota is on track to keep its title as the world's best-selling car maker after sales and production hit new records in November. Global output surged 11% compared with the same month last year.